Hello and welcome to LocationPoint Academy Part 9. Thank you all for joining me again today for this webinar. So you're here in the LocationPoint Academy webinar series. We had 8 parts already. Today we have part 9. We talk about initial stops and lane changes. Lane changes for our German listeners. These are the so-called Spurwechsel. I will explain you what those or what this means in LocationPoint trading. And yes, just as usual, please just give me a short feedback if you can hear me. I am already sharing my screen. Please just write either here or the guys who have me on Skype, just write me a short message. Okay, everything great. Okay, thanks for feedback. I did not get feedback in Traders yet, but on Skype I got feedback. Okay, so I assume everything is fine, as long as nobody is complaining yet. And then I'm ready to go. We can start, and let's see what we will do today. I have, as usual, the slides, and also as we have some new guys here every week, which or what I quite appreciate. But for those of you who know this already, I'll just have a few slides as for the beginning, a few minutes. I will then give you a recap of the last week. So last week we did not have a LocationPoint Academy because I was on a business trip in London. So this means last week was cancelled. Today we have the 9th part, what basically was planned for last week. So I'll give you a short recap from part 9, from part 8, sorry, and then you will get some theoretical explanation about the 2 topics we have today, and then we will jump into Agena and we will analyze some charts together, and I will explain you in practice what I told you in theory before. And that means for the beginning you can ask questions in German or English. Normally this is also no problem which language from those 2 you choose. You can just write in the chat here. So also those guys who just gave feedback on Skype, please, I don't look on Skype normally, please use the Traders Yard chat if you have some questions here. The webinar is recorded. Let me just check if I'm recording. Yes, everything is fine. Okay. Yeah, so I'm recording this webinar. I will publish it to the LocationPoint Protected group. I guess I will do it on, I can do it on Friday. Tomorrow we have a public holiday in Austria, and this means I'm not in the office. So on Friday you will have this video up on YouTube, on our YouTube channel, and I will post a link in the LocationPoint Protected group. That means everybody who is part of this group, who is a member of the group, will get the link. So these are hidden videos on YouTube. Only the guys who have the links can watch it. This is because, you know, you are here in LocationPoint public, in the LocationPoint Protected group. Only those guys are allowed, or those customers are allowed, who are customers of the LocationPoint add-on, because we want to have this, let's say, unique team here who is really focused on LocationPoint trading. Okay, so we have social media profiles for LocationPoint trading on Twitter and Facebook. There is we post our academies there, updates for academies, and some chart analysis. There is not so much going on there. We hope we can post more here in the upcoming weeks. But just so you know, also the new guys, if you want to have keep updated here on LocationPoint news, just join us here in the social media profiles. Okay, already getting to the interesting stuff. We have the Academy agenda, and you see quite a lot of green ticks here already. So this means all this on the left side, all those topics we covered already. From 1 to 8 everything is done. So we had the basics of location points, we had all the signals, and last week was a quite important one. Those of you who did not join in last week, I uploaded already also this video about multi-time framing, and this is one of the very crucial videos. It was for me at least to understand this multi-time framing, and I suggest really to watch this video and really try to, also for your trading, then really try to understand this multi-time framing, and don't rush into your trades, because this is also what I did very often. You you know multi-time framing, you know the concept then, but you really just take your time for each chart to look at the location point lines, look what they want to tell you, and don't, because it happens often to me that I overthought some of the very obvious things, which then of course when you take a screenshot for your trading journal, you ask yourself, what the hell did you do in this trade? Why did you enter this trade? So just once more to point out that this multi-time framing is very, very important. Take your time for each time frame you want to analyze. Really, each line, just a few seconds, check if it's rising, if it's falling, if there are retracements, if the charts are acting on this line, so that you really get a nice picture, and you don't oversee something, because it's location point trading is not that you have a clear set of rules basically, but you don't have to. It's not so less rules, so you have quite a lot to think about. And often also what helped me, I had a little checklist. Maybe we can also publish this checklist also for future, so that you just, it's complex. Trading is all trading styles are complex in some way, because you have all this emotional stuff also here. So a checklist can often help, because this complex stuff in your head, you think you know everything, or you think you will consider every aspect, and then you find yourself a few days later, when the trade is closed, you find yourself when you're emotionally free looking at this chart and see that you oversaw some very obvious things, like some location points in the upper time frames standing clearly against your trade, and you didn't have a look at it when you entered it, and you had this bias, you wanted this long trade, you wanted to be long there, or you heard some news about negative markets and you really were looking for short trades, and then you're fooling yourself for some short trades to argue with yourself that this looks for a good short trade, when there is some obvious things against the short trade. Okay, enough talking about multi-time framing. You see also who was part last week. I would love to talk an hour about just multi-time framing, how important it is, and just to understand. Yeah, I do not want to annoy you with all my talking here about multi-time framing and how important it is. I really just want to point out and just emphasize that, yeah, once more, that it is that important that I spend so much time emphasizing it. So today we are on part 9, we are at the right column already. We will talk about initial stops and lane changes, as I mentioned already. One small change for next week. Next week, what I added here, you see in the 10th week, so next week we have break-even stops, which is not so a small topic, and I added trailing stops because basically, I mean, I always wanted to do this in this session. I didn't have it in the header here. So next week mainly we will talk about trailing stops in detail for each signal. This is also in the signals. I of course mentioned the trailing stops already. So just that you this is new this week. I just added this before. So next week we will do break-even stops and trailing stops, and then we are already also done with the stops, and all what is then left is some workflow explanations. This is then also where I will work with the location point add-on. So this is, yeah, I show the workflow of end of day, I show the workflow intraday, some risk management rules. This will basically be a short, this risk management will be a short lesson where I'll just give you some insights how you can do this risk management, some rules also for live real account risk management. If you want to grow your account, what you can do there. Yeah, and then we have location point add-on once more in detail, and in the last week, I think this is then end of June or even start of July, we will just talk, we will do some analysis, and if it's possible some live trading. I will also try to get Gilbert here on board for this live trading, to have also him at least once in this 15 weeks program on board. Okay. In short, who are we? Gilbert Kreuzthaler, he's the CEO of AgenaTrader and the founder of LocationPoint Trading. So he is the basis of all what we talk about here. He is the founder of the LocationPoint trading style. He educated me, so I'm Manuel Leitner, and he educated me the last years. I'm in the company since 3 years. That means I got some LocationPoint education, some unique possibility here from his side. So he trained me and was my mentor, and so this is why I'm here, to be able to teach you now what I learned from Gilbert the last 3 years. And of course the disclaimer, also as we have it every week. All what I tell you here in the next, I don't know, 45 minutes maybe, is no trading advice. You are on your own risk when you trade in the markets, and all these trading and exchange transactions are associated with significant risk. So please just be aware of that and read this disclaimer. And yeah, you know, in each webinar we are forced to do this, so yeah. But I think we can start now. What I'm doing here now is I'm giving you a short recap of last week. So 2 weeks ago. And 2 weeks ago we had, yeah, as you know now also already, we had this important topic about multi-time framing, and we had there two big topics, because multi-time framing is important for the entries and multi-time framing is important for the targets. That means the first part we did was multi-time frame entries. This MTF stands for multi-time framing, as you can guess already probably. So what does this mean? What do we have to take care of in the entry of a LocationPoint trade? What we want to do? We want to search for confirmation of higher time frames. So basically there are two possibilities which you see at the bottom. Then let me get my laser pointer. So I talk already about these two possibilities here. So you can get your trade idea of the lower time frame. So basically it's possible that for lower time frames, for example for you or for me also, for as end of day trader, lower time frame means I get the trade idea out of the daily chart, and then I search for confirmation in the weekly and the monthly chart. Okay, so I get the idea in the lower time frame, which is the daily chart, and then after I got the signal in the daily chart, I check what the upper time frames are telling me, and if they support my trade idea or if there's something against the direction I want to trade. The second possibility, B here, is that you get your trade idea already of the higher time frame. So for me, or for end of day trader, this would be that, for example, you see a LocationPoint signal in the weekly chart or the monthly chart even. For long time investors also very interesting if you have some monthly chart signals. Anyway, if you for example now get a signal in the weekly chart, for me as end of day trader, this would mean that I know the weekly chart is already very strong in favor of my trading direction. So it means, for example, I have a long signal, I know there is a strong a high possibility that the market is moving in the up direction, and now I do not want to trade it on the weekly chart, so I want to get even tighter into the market. So I go to the daily chart, so I go one time frame lower or even two, and now I try to find some long signals in the daily chart. So then it doesn't matter to me if I have the long signal in the weekly chart, it doesn't. I check in a daily chart for any LocationPoint long signal. So I do not mind if it's an 8 train, a 20 train, or a reversal, whatever. And when I see it in a long signal, I will trade it because I know already the weekly chart is into my direction. So first possibility, the idea comes from the daily chart and I get confirmation of the upper time frames. Second possibility, I get the idea of for example, the weekly chart and trade in the daily chart, where I do not need any confirmation anymore because you have it already. You know you are in a confirmed market where you can trade long. So this is also what here above is meant with search for confirmation of the higher time frames. And also the second, or one more thing we have to take care of is we do not want to have climatic situations against our entry signal in the higher time frame. So as I usually do it, I'm having my signal in the daily chart, then I get my confirmation of the weekly and the monthly chart, So I also have to check if in the weekly and the monthly chart there is a climactic situation if I want to trade long. And the weekly chart shows me already that I have a climactic long situation. This means the market is overheated and very far away and far above the SMA 20, for example, in the weekly chart, and has a high possibility to come back. And this is not what I want to see. This is part of this multi-time frame analysis, that you check in the upper time frames the location point lines. This contains also the climactic distance indicator. Okay, I think for this slide we have it. Okay. Next slide. Now the next big topic of multi-time framing was the multi-time frame targets. And this means when I now have my entry, which is confirmed with the upper time frames, I also will search for my targets in the upper time frame. And that means I want to locate my targets at higher location points, so at location point lines from higher time frames, which could be some resistance areas, because also the higher location points are somehow even magnetic. That means that in this situation here, for example, I think I draw this for this reason. What probably will happen is the market will not go down here, because the EMA 130 and SMA 200 here are like magnets, and they will pull the market price to them, and only when they touch, when the market is touching those location points, for example, it will fall then. So this is often what you can see in the market, so that these location points really are somehow even like magnets. Also, of course, the big players know that the SMA 200, for example, is watched by many traders, and then they know also there are a lot of stops at the SMA 200, so they pull the market where they want it to. Often, of course, when they can do it, fish the stops and then let the market go away. So just as for one reason why this probably happens. Yeah, and the best case is if you can place your targets at some location point clusters. That means a cluster is like here, for example, at least 2 location points at a very tight area where they come together. Okay, I will continue here because I'm already talking quite long here, that we can get to the topic of this week. What I did here, one more slide, is I drew you one picture about multi-time frame entries. Here we have the 1 day. So I have here a stairway signal of the 1 day, and this is my version of this A from before. So I get the signal out of the lower time frame and then check the 1 week. Is there some location point standing against me? No, it's better even I have 2 location point lines which supporting my direction, so they are probably even a retracement maybe here, but they are supporting my long direction. And also the SMA 20, for example, here in the monthly chart is supporting my long direction, because also here we have a retracement. So in this chart I assume that we have a retracement here in the weekly and also a retracement here. So the SMA 20 is touched in the month, and the EMA 130 and SMA 200 in the weekly chart is also touched. This is then a high probability in the daily chart that you can play this signal in the long direction. Okay, next one. Okay, yes. And regarding target placement, so I now, before we analyze it, I can do this signal, that I can trade this. So what I do, I have the entry here. This initial stop is not exactly at the low because we have a retracement, a reversal signal. We will talk about this in a second in detail. So I have entry and stop placed, and now I just want to know where can I place my targets, and for this I want to look at the higher time frames already. So in the weekly chart, for example, I see this SMA 20 here, which I can use where I can place my target, my first one, for example, and I see the Bollinger, the upper Bollinger, where I can place my second target. So I look for these upper time frames and upper location points where I can place my targets, because as I told you, they are somehow even magnetic, or not. Even if they're not, let's say, magnetic, there are resistance areas and support areas. So I want to close my position out there, and if you scale into the upper time frames, you will also have some quite nice risk-reward ratios up here, and you can do some nice trades. And yeah, from the monthly chart we do not get any lines which we can use as targets, but as we have found two nice lines already, this is where we want to place our targets. Okay, finally we did the recap of last week. Yeah, you see this multi-time framing, it's quite somehow complex, and how to say, it's a lot of things you can talk about this topic, but we will leave it for this for now. I think also when we, after this LocationPoint Academy, when we continue with some advanced educations, or advanced is this is already, let's say, we are advanced already, but for some really some seminars which will probably come, which we are thinking about at the moment, the multi-time framing will always be one of the key concepts we will teach you. So also it will be it's one of the most important things. And also what I told you last week is also in the next weeks you will hear some multi-time frame analysis, because in this, when I see some signals now, I will try to have some multi-time frame analysis also for some signals. So we will do this also, even if it's not the topic of this week and next weeks. I will try for some trades or for some signals to do some multi-time frame analysis for you, that you get more and more feeling for it. Okay, so let's just switch to my whiteboard. And let's start with today's topic. So the first thing we want to do is initial stops. Initial stops. Okay. The first really let's say to the placement. This is really the once this, I want to do this like this. I want to say this is the basic placement, because I just let's assume we have a single bar here, just for each retracement that you just see it once, or we recap it for once. So what I'm drawing here is a double bar retracement, and the last thing we need is, of course, the triple bar retracement. So let's just quickly do some coloring here, that you just see. This one here is nearby, isn't it? Oh, okay, this was too quick. I should not talk and draw at the same time. Okay, but now, so of course the first one is the down one. Okay, here we write triple bar retracement, and let's get our, okay, so just the basic placement. Where do we have our stops placed normally? So this is a reason why I'm having this here longer, also do this here longer, because I want to tell you two different ways, for example. So single bar retracement is quite easy. We have an entry here, and of course the initial stop. Quite just at the low, we have the initial stop at the low of the retracement. So about the single bar retracement we do not need to talk more here. Double bar retracement is also quite clear. We have the entry here at the high of the retracement. And now what I just want to tell you here is you have basically you can choose the classic way, or the how it's in the handbook tells you entry at the high of the formation, so at the high of this double bar retracement, what the higher high is, and the stop here at the low of the formation. That means here is the lowest low of the formation, so basically it would be here the initial stop. If you are an aggressive location point trader, you can think you can do it. It would be in the rules that you can also do your initial stop already at the low of the second candle. Then you even can get tighter with the stop. If it's too tight, of course not, but anyway, the double bar retracement should be some 2 solid bars. So it's the difference here normally shouldn't be too much, because you have 2 solid bars and they are not allowed to be too far away, the 2 lows in the algorithm, but there is some distance sometimes, and that means you can choose here. Basically I normally use this lower low because it's very aggressive to do it here, but you can do it. I just want to, it's okay if you want to do it. Triple bar retracement, of course, also the entry here. This also, I mean, for example, the entry here would this is not okay. So just this is only this rule. You can only use this rule for the stops. You should not use some lower high here for your entry, because this is then not then the formation is not triggered. Okay, just to clarify this. So also the okay, come on, this was not nice here. The basic initial stop would be here, but of course you can, if you're an aggressive location point trader, again you can, let's make it like this. I just write this question mark here. This means you can choose. Yeah, okay. So you would be able to use this this last bar always. Just to use the low of the last bar. So also do not use this one here, but the low of this last bar. So in the way that you have this last green candle and you see there is a lot of buying power, and you do not want to have the market coming all this way down here, then you can of course put your initial stop here. But I would also, for beginners, I would just suggest that you use the low of the formation. Okay, and then I will just write down 2 more things. First thing, because we have 2 categories of initial stop placements. We have initial stops for trend followers, as when you joined the last weeks, you know already trend followers are the 8th train and the 20th train. And what you do here is you place your stop exactly at high low of the retracement. Okay, so what I drew you here in the picture above, the basic placement, the basic rules of location point trading, you have your initial stop at the low, for a long trade at the low of the retracement, and for a short trade at the high of the retracement. Okay, this is the basic setting, and this you should apply when you trade trend following signals. So this means when you trade an 8 train or a 20 train, place your stop at the low of the retracement. But then of course we have more signals in location point trading. We have, let's do this like this, initial stops for reversals, and these are, as you know, stairways, yo-yo 130 and yo-yo 200. for those, these are reversal signals, these are counter trend signals, and what we want to do here is we want to give the stop some space, because we want to avoid stop triggered by spikes. Okay, this is the reason why we do this. So for reversal signals, I will show you this then also in some examples in Agena. For reversal signals like the stairway, the yo-yo 130 and the yo-yo 200, we do not place it exactly at the low or high of the retracement, because you know the market is often coming with quite some power, building out a retracement at, for example, the Bollinger, the lower Bollinger line. Now if you're in a long setup again, then you have a great retracement, but what often then happens is, because you have this counter trend and counter movement signal, the market is getting shaky. I mentioned this in the signals already. The market is getting shaky, and you want to avoid being taken out of the trade by some spikes, and then it's moving into your direction. This means for those counter trend signals, we need to be a little bit careful. And this is also what let's say you can, I mean, of course you can always use also for reversal signals the exact placement, but I would definitely recommend that you give the stop more space. Okay, so that means I will draw this also here. I just draw the single bar retracement for reversals. So just, okay, this is a green one again. Just to clarify once more, this is the entry, and so I do not put it exactly here. I give it, for example, 1/3 of the candle size. This is some rule of thumb. Here is the initial stop. So I do not write very nicely today, but yeah, you know, I hope you can read at least a little bit of what I'm writing here. So for example, a rule of thumb is 1/3 of candle size. Okay, and also this rule of thumb, this 1/3 of candle size below the low for your initial stop, for example. This is only when you do not have any high or low or resistance areas in the history which you can use for the placement. So if there is some for example, you have some, I don't know, let's see, this is the market price, so you have here a very okay, so this is a little bit, I assume this market then, for example, went up here again. So but you have, for example, a very big high here. Okay, so then maybe you do not even place your stop 1/3 here, but you use, for example, this level here, not exactly at the low, but only give it a little bit more space. But then you have you can argue. This is also what I mean, you can argue with your trading journal why you placed it there, but also I needed some rule when in my coaching with Thiel, but I always had to tell him or argue for myself why I put some stops there. This is also, it's good when you have a mentor, because then you cannot get around this, and you cannot lie to yourself. But I suggest also it's quite nice, or quite a good idea, that you also try for yourself, that you have to, like, imagine that you have some mentor and you have to argue why you put your stop there, and don't do it like, yeah, okay, I feel like just put it down here, and yeah. If you can argue, okay, there was no high or good support or resistance area, even this would be okay, but always have a reason why you put it there. Just because you cannot, I could not go to Gilbert and say, yeah, I felt like this is a nice stop here. a nice stop level. You need a reason. You need a reason and tell him or why. And this also if you're a prop trader in a bank or in a fund or something like this. If you're a junior analyst or even a senior, you always have some guys above you normally, and you have to argue with argue with them or tell them why you did your trade like you did it. This is true also for your entry and also for your stops. So also I had to tell Gilbert why I put this entry here, and this is where I so often was corrected by Gilbert, because I did not look at the multi-time frames good enough. So I thought I can argue why I placed this trade here, and then Gilbert asked the question, what about this line in the upper time frame and this line? And when he then showed me, of course I oversaw some important levels. Anyway, I'm already drifting to multi-time framing, but just to point out, this is no real science here where you place your initial stop, but you need to have an idea why you place it there, where you place it. Don't do it like, oh, I feel like just place it here. You have a lot of, let's say, room for yourself, for your own decisions, for initial stop placements, for reversals. But if it's the easiest way is when you have some nice highs, for example, or lows, where you can say, okay, this is a great support area, I place my stop here. Okay, basically I think this was it with, let's check the time. Okay, for initial stops I am done already, so I will just continue with lane changes, because I just draw one picture and write a few sentences here, and then I will combine those two things in some analysis in Agena. So we have here the lane changes. Okay, 1 second. Okay. Yeah, okay, back again, sorry, this was the false button. Okay, so we have lane changes. Sorry for my voice, maybe you hear it, I caught the cold somehow, even if it's 30 degrees outside, so I'm a little bit ill. I hope it's not, it's okay from my voice here, but okay. Lane changes. What are lane changes? I will just write, because this topic, this vocabulary is somehow also, we introduced this because it was always called in German, it was a Spurwechsel. Okay, so this was initially a German word Gilbert introduced for LocationPoint trading, and for our international customers we searched for a word which could explain this Spurwechsel. So it's just like you change the lane. A lane is meant you change. So what lane changes mean? You have a trailing stop. For example, you trail at the SMA 20, and then you can do a lane change. This means you go tighter to the market when it's possible and switch from SMA 20 to an SMA 8. So you go to the faster SMA stop, for example, and you never go back. You do not go back from SMA 8 to SMA 20 trailing. You only get tighter. You only from, for example, so this is already okay. The first thing. Why are we doing lane changes? We do it to have a tighter stop, a tighter trailing stop. And the possibility for lane changes are somehow quite limited. So what we can do, for example, when we start with pivot fast stop. Okay, so this is, for example, for stairways or for yo-yos, for the reversals. Again, we start with a pivot fast stop so that we give the market also enough space in the shaky starting time of the reversal trade. From the pivot fast we can do a lane change to the 20 train. And from the 20 train we can switch to the 8 train. But it's only this direction possible. So I mean, what also would be possible, for example, would be that we have pivot fast and let's say like this directly switch to the 8 train. When the market is moving that fast that we already can switch to the 8 train, we can quite secure our profits, for example, and we can go quite tight to the market. So what we need for this, how can we change from the pivot fast to the 20 train, for example? What we need, when we have for example, we have a retracement during the trade. Let's do it at least during the trade. A retracement at the SMA 20, or at least some reaction. Then we can do a lane change to the 20 trail. 20 train. Yeah, I mean basically, okay. 20 train, 20 trail, you know, it's basically the same. Change to the 20 train. So that means we, for example, have a long, I will draw a picture in a second. If you have a long trade, long stairway trade, the market is moving in our direction, then we see some reaction at the SMA 20, market is moving, still is moving up, then we can change to the SMA 20 as our new trading stop. And okay, last thing here, retracement or reaction at the SMA 8, you can guess already, for a lane change to the 8 train. Okay, a lot of writing here, a lot of, I mean not a lot, but some theory, some theoretical concepts. But what does this mean? For example, okay, I will start a new slide here. Okay, let's draw some lines here. Like this. This is of course the SMA 20, and let's grab the SMA 8. SMA 8. Okay, and then for example we have somewhere here, yeah, this is okay, the Bollinger. Okay, that means we have here a stairway signal. So we assume we have here a single retracement, so we have a stairway signal here, we have entry, initial stop somewhere. For example, we can use maybe this level here. So what's important now, we basically are here in this time, we have a pivot fast. Okay, so in this we start the trade here, and we have a pivot fast hard stop, for example, and no soft stop, because we have this strong down move here, and now we have this retracement, so we trade against the trend. We have a reversal trade. Also we have a great down move here. We have pivot fast that we do not get stopped out too early. What now happens? The trade is moving into our direction quite quite great. Coming back down here, and what we now see in this area is we have a reaction at the SMA 20 at least here, even the SMA 8, but not so nice because we are below the SMA 80. So we have exactly, for example, here a reaction, a touching of the SMA 20, and then the market is moving up again. That means from this time on here, we can switch to an to the 20 trail. Okay, so up from this moment we trail with our stop at the SMA 20. We're coming from somewhere down here. You can do this then in pink. So again, market is moving up, coming down, but not completely down to the SMA 20. No, we see some reaction. Let's say we have something like this here, then we see some reaction here at the SMA 8 even. So we are quite nice in profit already. That means starting from this reaction we see here, we can even switch and start from this point with an 8 trail. This is the optimal scenario, for example, for a stairway trade. You start with a wider stop, you get the action at the SMA 20, you go to 20 trail, and then even an 8 trail is possible. And then because when you switch down then here to an 8 trail, you're quite okay. You're quite near to the market. So this is the initial stop placement here. For example, we have pivot fast, then we start here with trading at the SMA 20, and then we start here with trading at the SMA 8. And yes, let's assume this trade is still running here and we are quite nice in plus. Okay, and instead of having some, if we would still keep our pivot fast stop, for example, we would not have our stop here, we would maybe be here. Okay, if we are in 20 trail, we would be here. So if you see this, the pivot fast would be very far away compared to this. So this distance here, the SMA 20 is already to the current market price not that far away, but the SMA 8 is then very tight, and if the market just moves down here, we have all this here as our profit. Okay, so this is the idea behind the lane change. If you see that there is a reaction at some location at the SMA 20 or SMA 8, you switch your current trading strategy. But again, what is not allowed is if you see, okay, I'm having pivot fast at the moment, then I switch to an 8 trail. Then you think, okay, no, this doesn't work out. I switch back to pivot fast and go to S20 trail. So it should be like this: if you have the reaction, switch to what you see. Reaction at the SMA 20, switch to 20 trail and stick to it, and do not play around with it anymore. Do not push it back to pivot fast. You had a reason, you should have had a reason why you changed to SMA 20 and 20 trail, so stick to it. And also if you then on the 8th trail, you know, okay, after the 8th trail you cannot go any nearer, you cannot go use a trailing stop. Only way you can go with bar if really very far in profit, but this is also some advanced stuff, you do not have to do this. What I do is I try to go to the SMA 8, so to the 8th trail, because this is very nice, because then you know, okay, I'm very tight to the market, I have a nice profit already, because you started with very far below, because you have probably, if you can already switch to the 8th train, you had some nice profits already. That means after the SMA 8 and after the 8th trail, you're done with lane changes, and you probably had a very nice location point trade, and traded until the end, until either the target is reached or you're stopped out with the 8th trail stop. Okay, so it's already 5 to 7. That means, as usual, I need a lot of time for the theoretical part. I will just try to go over a few signals. I will just switch here. You know, exactly, I saw this signal here before already. So let's do, I don't know, 3 or 4 examples, and then basically this would be it for this week, because I have this quite limited time slot of about 1 hour here. So as we talked already, okay, this is, I analyzed this already, I think one of the last weeks. So I cannot exactly, maybe I already told you about the lane changes here, but anyway, let's check it once more. So we are here, we have here a stairway signal. When we then do some multi-time frame analysis, we check here. So I always draw this ellipse that we see in the upper time frames where we are at the moment. We see here, okay, we have also at the SMA 200 a nice retracement. We have a closing above the SMA 8, above the SMA 20. So basically it's a retracement at all of the 3 lines. Even the Bollinger here is touched, so this is a very nice signal. And also you see what's going on after this. Let's check the... Okay, yes, this is... You see here maybe? Okay, just that you see it once in the monthly chart. So you also see here, I mean, SMA 8 is from the monthly chart is also supporting us. Yes, we see this here. So this is SMA 8 of the upper time frame. So this is a nice signal. Also multi-time frame analysis is done, and we can now, yes, I just wanted to show you, if you, for example, where you could place one target is the Bollinger. So I would say, yeah, let's do this. We have entry here, target, one target here, for example, and the second one we do not have any lines. But what's also great here is, okay, I would say normally exactly the exact stop, the basic stop would be at the low here. Then we said, okay, let's check in the history if there is some nice low or high where we can place our stop. And what you can see here, we have, let's do a rectangle here, we have even from here, we have here a great resistance. We can even draw it from here. We have a great zone here where I think it's a great placement for our stop. So this is, I can argue this when I show it to Gilbert. Okay, I draw this zone here. I say, okay, I place my initial stop somewhere here. If it's now exactly at this low, whatever. So I have this resistance area here, for example, and place my. So you see it. I make it a little smaller. I place my initial stop here. Let's do this in pink. Okay. So we have one target here, for example, the second one, I don't know, somewhere. Okay, somewhere here. What happens now? I will disable this here. So basically the trend is starting to go quite nicely in our direction. So that means somewhere here we will place at least our break-even stop. But we are still at pivot fast trailing. That means starting from somewhere. So basically what we are looking out at the moment basically would be some retracement at the SMA 20 to switch from a pivot fast to the SMA 20 as a trailing stop. But it's even, the market is that fast that we see this reaction here at the SMA 8 already. And this is already for us the sign that we can start here with 8 trail stop trailing. This is the soft stop. Then of course we would trail the lane changes we would do normally with the soft stops, and the hard stops are you can stick to pivot fast with so the hard stops you shouldn't, I wouldn't okay, you shouldn't, you would, I wouldn't use an 8 trail stop as hard stop, because you know you have some spikes in and then you're immediately out. I would normally use the 8 with the soft stop and also the 20 with the soft stop. So the lane changes normally should be with the soft stop, and the hard stop you can, as you have your preferences, you can have the hard stop here at break even and only have the soft stop doing his work. You can also have, if you are at the 8 trail already, you can use the 20 trail as a hard stop. This is no science here. This is no strict rules. What's important is that you have your soft stop trailing here with the 8 train. Where the hard stop lays is not so important, because the soft stop will be the one who normally triggers the closing of your position then. Okay, so where did I stop? Yeah, basically this is it already. We had this lane change here from the pivot fast or from the break even stop exactly to the SMA 8 here, and then I stopped out somewhere here, and yeah, basically this is it. And I will already switch to the next one because time is running away. Just that you get a few ideas here. Where did I have? I had one other example. Let's switch to the charts if we have some nice ones. I prepared some more in the other lists here, but I always think I have more time. I think this one was one of the, yes, this was one of the ones I wanted to show you. We have a stairway signal here. Entry. Stop. I just place it at the low for the moment. So let's start with the stop. Where to place the stop? We have some basic small low here, but when we look more in the history, we see that this is not a nice area. This is a nice area where we can place the stop. So I would say maybe somewhere here I will place the initial stop. So I take this low, about approximately this low, as the initial stop placement. Let's see what the upper time frames are saying about this trade here. What are they saying? They say that basically, let's also check the, okay, so in the monthly chart at least we have, for example, here a close above the SMA 8. This is important. So we have some reactions here at the SMA 8. In the weekly chart we are not so nicely here. We have the SMA 20 and the SMA 8 in front of us. So basically we need, this is something I would not trade this normally. Okay, so I have this stairway signal. I would analyze it here now because it's nice to have to show you also one more lane change here exactly to the SMA 8. Yeah, but just that you see, we have this SMA 8 and SMA 20 here in front of us. If we trade here long, we have the SMA 20 is falling. It's exactly in front of us as a strong resistance, so I wouldn't trade it anyway. Also regarding targets, let's continue here that I can show you two more charts. Also, I feel my voice is not getting better with me each minute here. Okay, but continue here. The trade is going nicely in our direction, so we place our initial stop, a break-even stop here. Then the market is coming down and moving up again. So you can say, okay, this is a reaction at the SMA 8. Here, what I would do in this situation, it's nearly touching the SMA 20, and you see, okay, I would not go to the SMA 8 trailing here because, you know, it's quite, it broke it. So here I would go to SMA 20 trailing. But then here, for example, when you see, okay, again a touch exactly at the low, here I would start SMA 8 trailing. So you see also down here, it's no exact science. It did not touch it, but I want to have a tighter stop. So I could go to SMA 8 trading already here. It wouldn't hurt my trade because there would not be any difference, but just from my feelings or from my, let's say, experience, I would not trail this exactly from the beginning at the SMA 8 because these big candles here. So I want to have it tighter, but give it enough air to breathe. So I put it here to 20 trail, then here to 8 trail. Okay, so yes, I mean, a great trade here. We are somewhere out than here, I guess. Okay. What else do we have? Give me some lane change. What can we do here? This one here is nice to see why I told you about the initial stop placement, because entry here, initial stop, no, so when I place it at the low, this wouldn't work out. But what do we see? We have a great high here. So I place it, for example, at this important high here. This one here would be too near to the high. This is near basically the high. So I take this high, and this is exactly what's happening, and this is why we have this rule, or why we're doing this. You see, it's going into the other direction, but it's coming back. And then there is this awful spike, which also happened often to me, that I was put out then of the market here. Okay, so you see when the initial stop is at the high here, this would not work out well. And yes, I mean, this is why our initial stop is up here. After this big candles, okay, this is not nice here. Somewhere here after this very intense red candles, then I would quickly do a break-even stop here, because it was quite near to your stop, to be stopped out. Place it down here to have a break-even stop, and then we wait. We see here again, we see here again some reaction at the SMA 8, but it's not a nice reaction. Again, it's fuzzy, it's not at the point. So this would be for me, you cannot go to the 8th train here already. This is not good, but you can, because you are quite in profit, you can start here trail with SMA 20. Okay, so you are here at SMA 20 trailing, and basically, yes, this is it until somewhere here, then you're stopped out. Often what you will often see is when then the SMA 8 here, if you have a look at this in detail, it's going up. When it's changing its direction from down to up, it's often an early indication that there is a strong, or a correction is coming. I mean, it's great to see that this correction from here is then stopping exactly at the EMA 130, We do not get a signal here because we don't have a nice retracement, but anyway, it's just nice always to see how these location points are, what the market is playing with the location points. One last, let's look for one last lane change. What I did not show you in here in detail was now the initial stop placement for a trend signal. So if I just take quickly this one here, if we assume that this one here, for example, is 20 trail. Excuse my writing here, but I just want to quickly show you this until I have to stop this in this channel, because I have some limited time, as I told you. So this limited time is not because I have to run, because this is just because other people then are needing this room and for showcasing all this stuff. But anyway, entry here, and we are in a, let's say this is no nice signal. Let's do not take this. I cannot show you with this bad signal here. It's just give me one 8 train or 20 train. Let's just take this one here. Some 20 train here. Okay, this means 20. I just want to show you entry is at the high and the initial stop is exactly at the low of the candle. Okay, this is all what I want to show you, just to have also these ones mentioned. Okay, so exactly at the low. This is for the 8 train and for the 20 train. This is all what I wanted to show you here. Continue. What we have here. This looks good. Okay, so we take this stairway as our last signal to analyze. Entry here. Stop. First one at the low, then we look where can we place it, and okay, this is, so we have now this area here. So I mean this is a low here, we have this high from here, then this gap here came, so it's not the worst place to worst place to place your stop. A quick look about multi-time framing. So we are somewhere here. So I have to do this also in fast forward. We have some sessions then where I can talk about this in more detail. Yeah, we see we have a close about above the SMA 8. There is no location point standing against us. SMA 8 is rising, SMA 20 is rising. Bollinger is not coming against us. Weekly chart is approved. Also no big red candles in front of us. Where are we in the monthly chart? We are here. So also what we see here is even some reactions here at the SMA 8. SMA 8 is rising, SMA 20 is rising. Bollinger is quite near, but it's not coming against us, so we can, this is okay. And yeah, okay, we can do this trade. Targets we will we won't set at the moment, just for here for demo purpose. So again, we are in the trade and market's coming back. Okay, so we are running in danger if our stop is too tight here that we are stopped out with a spike. It doesn't happen here, but as you saw in the last example, it can happen. Market's moving up, no reaction yet at the SMA 8 and not at the SMA 20. Market is coming down, and what now happens is we have a reaction here at the SMA 20. That means we will start trailing at the SMA 20 here. Continue. Basically yes, I would say you can see this then as a reaction here at the SMA 8, so maybe I will start trailing even here as the SMA 8. I mean, the market did not go very far here. I mean, I see of course these nice candles here, but when I have to be honest also here, of course, in the coachings, because in the academy, because I cannot say yes, of course I would be in the trade still when this is coming. Basically, I think I have to admit I would probably go to SMA 8 trading here, or even if you keep trading at the SMA 20, probably or definitely you would be stopped out here, because this close is a few ticks below the SMA 20. That means the soft stop here, if you are at SMA 20 trading, is broken. Hard stop is moved here and you're out of the trade, which is of course sad when you see this happening then, but of course this is trading. Sometimes you cannot take each big move. Even if you're taken here out, you have at least, I think, 1.5 times the risk earned, and also it's better than nothing, yeah, and also will help your performance. Okay, it was it was a little bit fast forward because I needed that a long time to recap the multi-time frame session. I hope it was still understandable, and I hope you still learned new stuff. Initial stop and lane changes are important, but this is already, we are in a little bit more advanced stuff now. So next week we will talk about break-even stops. Also, you know this already because I talked about this all the time, but in detail once more, break-even stops and also trailing stops. So most of it would also be a recap of the lane changes then next week, and so each following week will be more and more of the complete picture, and each signal I see and analyze, you will hear all these topics again. You will hear, I will not explain it in detail then anymore, but it's like we build our toolbox. We are nearly finished with building it, and so for each signal we see, then each analysis, you will have also a recap of what you learned all these last weeks. Okay, so don't worry if you do not understand each thing I told today, for example, or about the lane changes. We will have enough signals and enough time also in the next sessions to talk about lane changes and all, just a complete picture. Okay, so it's just one more tool in our toolbox to know that we can switch our trading stops. And with this, basically, I am done with today's session. Thank you all for joining me, and thank you for keeping that long here. And yes, I will see you next week on Wednesday, again at 6 o'clock PM. I will have session 10 with you, and I'm happy and looking forward to meeting you all at this session 10 next week. Okay, goodbye guys, and have a nice evening.